What's going on, guys? As you can see, it's a pretty red day in the market. The Bitcoin miners are selling off again. Bitcoin's selling off a little bit, down to 70,000 as of this upload. And behind me, with exception of a few names, you see a sea of red. So we're going to talk about what's going on, why the market's likely selling off. We did just get PPI data, and it came in hotter than expected. This definitely puts some fear in the market. This makes it more likely that we're going to see rate cuts later down the road, and it's definitely putting a little fear into the market. But let's get started. We're going to go over what's happening with PPI. We're going to take a look at Bitcoin. I'm going to feature a couple articles here, and let's get started with PPI. Wholesale inflation unexpectedly accelerates to the highest level since September. And our producer price index, PPI, that came out today as of this upload Thursday, we had a 0.6% increase from the prior month. And on a year-over-year basis, we're up 1.6%. And these are much higher than estimates of 0.3 for the month gain and a 1.1 annual gain. You can see that we hit a bottom here in terms of PPI back towards summer. Almost saw it get deflationary, almost saw a negative PPI. But no, after that we started rising. Things started cooling off after seeing a little rise, and now we're back to seeing higher levels on PPI. It's definitely putting some fear in the market, and typically PPI is a precursor to the other inflation data metrics because this is from a producer level, warehouse level. Higher prices from the warehouse level typically translate to higher prices for the consumer. But when we look back, this will be a blip on the radar and we will still see rate cuts. It does look like they're getting later and later into summer, it seems. And a rate cut in May, in my eyes, is very unlikely at this point. Now, this is, no surprise, causing a little bit of fear on the Bitcoin miners, on Bitcoin, on the riskier assets for the most part. And just look at what Bitcoin did. It went and tested this support line that I mentioned to you guys. Now, we saw a bounce. You could say it was a bounce on the support line. You could say it was a bounce on the 200 MA, on the hourly, I guess. I don't know who's watching that. But we did see a pretty sharp bounce after becoming oversold on the 1 hour. Now, if history is an indication of what we're going to see soon, we should see a bounce and go on to create new all-time highs again. It might not happen again, but that is the expectation. And you know, it's nice to sometimes see some little cool downs. It brings Bitcoin to more reasonable levels on the RSI. We were pretty overbought on the daily, on the weekly, and getting to overbought levels on the monthly, but in previous history, in previous halving cycles, we have seen a much more overbought RSI before it's time to pack your bags. And based on where we are in the cycle, we're still very early. One of the indicators I'm watching for to give me an idea of when to start selling, when to really trim, when to consider maybe we're at the end of this Bitcoin bull cycle is when we see a crazily overbought monthly RSI like this. We've seen it every halving cycle and we're nowhere near it yet. This might be a minor pullback and we go on to rally more, but keep an eye on the monthly RSI. When we really get running, when we get towards the end of 2024, early 2025, if you see a monthly RSI at previous levels like that, just sky high, well, it's definitely time to be cautious at that point, but we are not anywhere near that point yet. And I do expect Bitcoin to continue its rally and some consolidation, some cool downs once in a while is to be expected with Bitcoin. Now, I do want to show you guys this article. I do think it's very relevant for what's going on right now. A lot of you are a bit worried about the Bitcoin mining stocks, seeing as they've been selling off into the halving. A lot of people are either starting to give up hope or starting to just get extremely fearful, starting to question their decisions, starting to say things like, I should have gotten out of these Bitcoin miners and get into MicroStrategy. Maybe I'll do that now. And while I think MicroStrategy will certainly continue to rally, I wouldn't chase something that's going massively up, getting overbought, and get out of something that's pretty near oversold. I do understand the strategy of following the largest mover, following the stock that's doing the best, following the strongest stocks, but I do think selling the Bitcoin miners now would be a mistake. At the most, we're probably looking at, you know, another couple of weeks of the sell-off as we get to the halving. The halving is roughly a month away, and I do expect a sharp recovery after the halving. I could be wrong in that. We could continue to sell off after the halving, but I personally don't expect it. So this Compass Point research and trading analyst Joe Flynn said in a February 27 research note that he expected miner stock volatility to continue in the 50-day lead up to the halving, followed by eventual short-term weakness related to hash price declines. And hash price, which basically factors in the price of Bitcoin, network difficulty, block subsidies, and transaction fees, well, this basically measures how much a miner can expect to earn from a specific quantity of hash rate. It is positively correlated to Bitcoin price changes, and negatively linked to fluctuations in Bitcoin difficulty. More machines going online, more competition between companies means a higher difficulty for those companies. And Flynn goes on to say, we think the market is trying to determine the equilibrium levels of Bitcoin's price and hash rates and the near-term impact of profitability as a result of the halving. Keep in mind that, you know, profitability is still, in my eyes, pretty out of reach for a lot of these Bitcoin miners. and there are very few posting profitability. I think what he means is the near-term impact on operations, as many of these are not profitable. And look at what he says here. After hash prices decline post-halving, we expect strength in miner stocks, with Bitcoin price growth outpacing the rate at which new machines can be installed or come back online. So Bitcoin's price is going to grow so fast that these companies that currently have their machines going are going to soak up a lot of those rewards. Bitcoin's price appreciation will outpace the new machines that these miners are installing. Basically meaning that each Bitcoin miner out right now after the halving, they're going to really enjoy the Bitcoin price increase. And while difficulty levels will of course rise, the rate of Bitcoin's rise will be a lot more beneficial to these companies and will outshadow any difficulty increases. And check this out, the higher Bitcoin price has led to concerns around miners who have not upgraded their equipment staying online longer rather than shutting down, since they can afford to run less efficient equipment when Bitcoin price is at current levels. Now, let me reword this. This is just worded very strangely. While there are concerns around miners who have not upgraded their equipment, the recent rise in Bitcoin price makes it more likely that they'll stay online longer rather than shutting down, since they can afford to run less efficient equipment when Bitcoin price is at current levels. Hopefully that makes more sense with the wording. Another thing that's currently bothering the markets, and a couple of you guys have mentioned this, is the potential 30% tax on Bitcoin miners' energy usage. I find that very unlikely to pass. We heard previous things like this in the previous bull cycle, and many of these things ended up dead in the water. If this does pass, the tax will likely change, and there was a similar proposal last year, and obviously it didn't pass. They're basically proposing it again. And the guy that mentioned that Bitcoin's price rising will help out these less efficient miners, they can likely run for a longer time because of Bitcoin's price appreciation. Well, that same guy says that allocating to miners will continue to be a key strategy for Blockworks, a fund that has CleanSpark, Marathon, and Riot among its top 12 holdings. One thing he fails to mention here is, it wasn't during the last bull run that a lot of these companies went under. It was in the crypto winter. During the bull run, the stock prices are very likely to rise, in my opinion. And a lot of these companies will dilute, which is of course a negative for shareholders, but overall for the company, it means longer survival. Now, my fear is in the next crypto winter, not in this upcoming halving and the bull run that will continue. I think these miners will do fantastic, and the ones that are a bit rough around the edges, the ones that really need capital, will definitely take advantage of dilution, just as they did in the previous halving cycle. But the real fear will come in the crypto winter. Will these miners survive during crypto winter? That's the big question. And last cycle we saw companies like Core Scientific go bankrupt. We saw companies announce reverse splits because their stocks were under $1, such as AnyStock or Sphere 3D. And one thing to think about, I know this is far away, but where do you think Bitcoin will be at the next crypto winter? Will the low be 30,000? Will the low be 60,000? I think people are overstating that miners aren't going to survive. The riskiest of miners, of course, some won't survive, but this will come probably in crypto winter, not in this bull cycle. I think it's very likely that we will see price increase on a lot of even the riskiest miners, and the companies will take advantage and dilute shareholders. I'm not saying dilution is a positive, but it is something that's going to keep a lot of these riskier stocks afloat for a longer period of time. All right, now I want to mention a couple of Bitcoin miner stocks. First off, I want to mention btbt. We're still following this descending, broadening pattern. I do think it's very likely we head down to $2 to test it as a support. This will be an important level to watch for btbt. I would expect us to hold it up. However, the market may have other plans and push it even lower. But for a lot of you that were itching to get in when these were rallying, when these were running up and people were saying, oh, should I buy now? Should I get into the miner stock still? Hopefully those same people that were looking to get in back then on these previous runs, hopefully they're thinking about getting in now rather. We are approaching oversold levels now. We are now oversold on the 1 hour. We are no longer heavily overbought on the daily. I think things have definitely sufficiently cooled off. And that's not to say they don't sell off more, but this is the time to be a buyer. When things are fearful, when people are worried about the Bitcoin miner stocks, not when everyone's euphoric about them, not when everyone thinks they're going to go to 5x multiples. This is something that will take time. There will be a lot of run-ups and pullbacks. It's not just going to be a straight shot up. So I do think this is the time to be taking advantage. These really, really red days when everyone's fearful, when people are thinking about just selling and giving up, getting into something else, I think those are the times to be very bullish on the Bitcoin miners. Times like today. Now, I do want to give you guys an update on CleanSpark. I did buy to close my covered calls. Now I did this not because I think CleanSpark is going to for sure hit $24 by the time they expire, but I did that because I already got the majority of my premium from them, and those calls are offering very low premium right now, so I'd rather close them out and wait for the next run to go in and sell some more covered calls. So I am going to be waiting here, waiting for the next pop to potentially sell some $25 covered calls and maybe higher if we do start really rallying. I just thought I'd give you guys an update on that. CleanSpark, I do think, can head down towards its 50 MA, which would put it on this ascending line here, this white line, which was a previous kind of a resistance point, and then we broke out of it, gapped up. This was on earnings too, so I mean, I don't know how much the market's really likely to follow this trend line, but it does just so happen to follow the 50 MA. We might get a good bounce here. People are still looking for this gap fill. I'm not sure it's going to hit there. I would be a buyer here. I wouldn't wait just for that gap fill. But if you're extra patient, you know, that's up to you. It would definitely be a great add to get into that gap fill. And heading down to that 50 MA would put CleanSpark down roughly 45%, nearly 50%. And I do suspect, you know, seeing a 50% drop from our recent peak should be somewhat sufficient in terms of the market pricing in rewards being cut. But we might see more of a sell-off. We might end up down 60% from our peak, 70%. I find that kind of unlikely though. And you know, if a lot of you were looking into getting CleanSpark, you know, back on that last run, I think now is the time to really be looking at it. We're no longer overbought. We have definitely cooled down quite a bit. The weekly's no longer overbought. The daily's no longer overbought. The 4 hours neutral, and the hourly was oversold. We had a little bounce here, but you know, now is the time to be getting into the mining stocks when there's fear. When you're looking at accumulation, you definitely want to be buying the fear, and you want to be either trimming the greed or at least selling covered calls into it, or I guess simply holding. Now we also have something very exciting. JP Morgan sees $220 billion of inflows in the next 3 years. Now, what's this mean for Bitcoin's price? Well, if we're directionally correct on the level of net inflows, reaching 220 billion, applying our estimate of the current multiplier of new capital of 25 times, this alone could drive a 5.5 trillion Bitcoin market cap increase, or $280,000 per Bitcoin. Now keep in mind, just the other day we saw record ETF inflows. They're not slowing down, they're actually increasing. But let me know what miners you guys are picking up. Are you avoiding them right now? It's definitely a little bit of a rough day for the overall market. Finally seeing Bitcoin cool off a bit, but it does have these little corrections where it then quickly recovers. We'll see if it repeats itself here. But let me know what stocks you guys are taking advantage of. I know there's definitely been a little bit of fear lately. People are definitely getting worried. And honestly, it's times like that that I get excited. But let me know how you're feeling about things lately. Thanks as always for watching, guys, and I'll see you next time.